Good afternoon. This is Oliver Slope with Blue Line Futures coming to you from the Chicago Board of Trade. Today is Thursday, May 8th, and it is an exciting day. Just got the announcement of a new pope, and he is originally from Chicago, so that's pretty cool. Also pretty cool, we got continued strength in the equity markets, really powering higher following what was, reported as a breakthrough trade deal with the UK. Details on that still relatively vague, but nonetheless, we see equities, NASDAQ, and the S&P continue to push higher, and the NASDAQ right back at that 200-day moving average, which we've talked about in the last few videos, about 20,300. Above that, we're looking at resistance from the end of March highs and the 100-day moving average. So that comes in about 250 points higher, near 20,500, 20,550. So that's going to be the next line in the sand to look at if we get a strong close through today's session. Now, other markets on the move today, crude oil, also something we've talked about here recently. Back to that psychologically and technically significant $60 level. And with the recent action, we've got a few technical signals going off. For more on that, head over to our portal on BlueLineFutures.com. Matty Candlesticks gave a breakdown on that and what we're looking at specifically, contract months and upside potential targets on that end. Now, markets on the softer side today include gold, which is under pressure following positively interpreted trade news. For more on that, let's go to our Chief Market Strategist, Phil Strebel, for some insight on what's going on there.
Thanks, Oliver. I'm Philip Strebel, and there's been a lot of interest in the precious metals markets recently. Taking a top-down look at the gold market, it's essential to take a step back and analyze the dynamics and the main drivers of any market. What factors move prices, and then rank them accordingly. In my opinion, there are three bullish factors and also three bearish factors driving the gold market right now. One being the tariff negotiations. Are we making progress, which would be a headwind as traders would rotate back into risk assets, or are trade relations continuing to deteriorate where traders might look for the safety and comfort of owning the bullion? Secondly, is central bank demand. China has been adding to gold reserves for 6 straight months. Will this trend continue? Third are the ETF flows, where we've seen a 7.1% increase in the year-to-date change, showing that the smaller retail investor is allocating towards gold in their portfolios. Three bearish factors include the US dollar, where if prices rise, they do have a 95% inverse correlation to the gold market right now. Secondly is the Federal Reserve and the uncertainty with their wait-and-see policy. They are seeing upside risks on inflation and unemployment due to the tariffs. What we could see is a larger cut in September, where they come and they front load with a 50 basis point interest rate cut, which could act as a small tailwind to the gold market. Third is managed money, where participants have reduced from those record longs because of the fact that record high prices dictate that they are going to take off and book some of those gains. One market that we've been watching is the silver market, which is a hybrid metal because of the precious and industrial factors of it. One thing to note is that while silver is lagging right now, it's the industrial exposure leads to underperformance in relation to gold in economic downturns, but oftentimes leads the complex coming out of periods of uncertainty. So that's it for me, Oliver, so I'm sending it back to you.
All right, great insight as always, Phil. For those of you who don't know or follow Phil, he is really great at what he does in the precious metal space. He puts out a lot of great information, does a daily podcast as well as chart pack each and every day. A lot of that information goes out early in the morning, so you can sip on your cup of coffee, see what's going on in the metal and outside markets, and get some perspective on that end. That's always emailed out to clients first thing in the morning, and is also available on that portal, BlueLineFutures.com. You can find it there. Now, wrapping things up in the ag markets, July corn continues to be under pressure, making new lows for the year yet again, despite strong export sales. The technical breakdown that kicked off last week really keeps the door open for a potential retest of those lows from last fall, which is getting closer with each down day that we get. Targeting 435, that's where that comes in. So that's going to be the next downside objective if we cannot find our footing here in the near term. Talking with clients on how to play this. It's kind of hit or miss what you want to do. We're kind of in the middle of no man's land. It's telling clients, I think if you want to be long the market, either wait to buy lower prices or wait to buy on strength. Right here in the middle, you're just trying to pick a bottom, and don't see a whole lot of conviction behind doing that just yet. Now, cattle, on the other hand, very, very strong. Another record highs for fats and feeders. We've got feeder cattle contracts most of the contract months, with the exception of May, trading over 300 for the first time. Despite the monster rally that we've seen really since the beginning of April, when we had that large equity market sell-off that coincided with a large sell-off in a lot of other markets, such as cattle, we've powered back and just been on a resilient move to the upside, up and to the right there. The RSI still not even overbought. Something to keep an eye on there. Cash market still continues to be firm as we head into the back half of the week. Now, lastly, a reminder, if you are not a client and want to start receiving our daily commodity commentary and have access to our portal, head over to bluelinefutures.com. If you'd like to discuss markets or the services that Blue Line Futures offers, we've got a great team here that's ready, willing, and able to help. So don't hesitate to call 312-278-0500. Again, 312-278-0500. And remember, trading futures and options involves substantial risk of loss and is not suitable for all investors.